Welcome back, everyone, to today's market recap. There's going to be a lot I'm going to review today. It should be a pretty good episode. I'm going to be reviewing both yesterday and today, so Monday, December 16th, and also today, December 17th, which was a Tuesday, and I got a lot of journaling done. So this is going to be a really good episode as well. We got trades from Dodgy, we got trades from Trader Diego, and a couple other people. So this should be a good episode. Sit back, relax, and let's talk about what happened. So, going into the market, let me pull up my notes on my other screen. Hang on. So, going into the market, as you may have seen in my weekly recap, I was really obsessed with these bearish SMTs. We had SMT here, and then SMT here. I mean, it's basically the same SMT. And so this made me super bearish. But what I overlooked was that actually this right here, if you think about it like structurally, structure-wise, right? This right here is a giant breaker block. So it's a low, a high, a lower low, which swept out this liquidity into this fair value gap, then a higher high. So this is a giant breaker block. This is going to be hard to get past. So you can see that breaker block highlighted right there. In the lower time frame, you have this fair value gap here. So this is something that I didn't exactly realize in the moment when I was bearish going into yesterday. And you'll also note that we actually ended up getting SMT at these lows. Something else I want to add is we had this CRT, which this made me bearish too. This candle wicked after we had this giant candle body. We had this tiny wick, and when this happens, a lot of time you will distribute to either the midpoint or you'll go to the other side of the range. So the CRT low. But that's exactly right. You'll either go to the midpoint or you go to the other side of the range. I immediately assumed like we probably were going to go to the other side of the range. But with the reality of this was we had this breaker block here. We had this SMT. So we're not necessarily going to see this CRT low get taken out. So you can see if I measure out this candle body, this 12 hours candle range here. Let's pull this back. Measure this out here. You can see we do actually go and tap the midpoint. So that objective for the CRT was hit, and so it didn't even fail. It was totally valid. Once we got an SMT within this fair value gap, and we were holding this breaker block, I should have known to turn bullish, and that's just on me. So with that as well, you'll note if I go down the lower time frame, note how we respond to these opening gaps. So here you can see this. So these are new day opening gaps. These are the gaps that form between the new day, between one day and another. So you look at how we respond to the midpoint of this gap, right? This is a bigger one, right? And then look at how we hold this one, and then this one. We're respecting these bullish levels, these bullish opening gaps. So that should have been a big red flag for me as well, that I probably should not have been bearish. Unfortunately, I didn't see that. All right, so then on the lower time frame, let's talk about some trades you could have taken on Monday. So getting rid of this and getting rid of this. So you should have known the bias was bullish based off of all that. And on the lower time frame, let's see if I can find it. The trade that FA took that I really should have taken, but I was scared, and I should have taken it, and I'll explain why in a second, was let's see here. Okay, first you'll note, this is just a note first. You have a 3-minute breaker here. And you have a fair value gap. This is also a 15-minute fair value gap. So look how we respect that. But that's not the trade. So here's your breaker for value gap. Then on the 2-minute, we get this really, really nice inverse fair value gap. Within 3 candles, you'll actually note like this is a 2-minute CRT here. So possibly you could have even predicted this candle. But once this inverses, this is a really good inverse fair value gap. Now this happened really fast, and I liked it, but I was nervous. I knew we had good liquidity here. I knew we had good low resistance liquidity, but I was nervous because we had an external gap, and you're not supposed to take a trade if there's an external gap in between you and your target. But this was probably worth taking, maybe not copy trading, but it was probably worth taking on like one account because you actually have a pretty good, quick, and easy stop loss to break even at either one of these highs. And so, I mean, let's say 50% chance you end up going and getting break even. Okay, like it's break even. But then the other half the time, you're probably going to go run this range here. And so that makes this trade really, really nice. We had a good sweep. We were delivering from somewhere. So this was a really, really nice trade. And I think maybe even we got SMT. I'm going to check real quick. It's going to take me too long to check, but this was a really good trade. I would have simply targeted 1-to-1, so maybe just past the range here. I like to get really high quality 1-to-1 trades. And yeah, that would have been a 1-to-1 trade. So with a quick stop loss to break even, I think that one would have been pretty good. All right. Next, and you'll note this is as well, this is good. A, accumulation, manipulation, and then distribution. Also, look where we go. Check this out. Measure out standard deviations of this. We go to that 4 to 4.5, and we go to that 2 to 2.5. So that's pretty cool. Okay. Next, let's talk about the trades I took that weren't so good. And the biggest lesson I learned from Monday is if you're with the new rule I made is if you're within 75 points of all-time highs, this is my new rule. I'm not shorting. It is just not worth the risk. You will see so many shorts that fail. And then again, they weren't the best shorts in the world, and I'm going to explain why. But you will see so many shorts fail, and it's just automatically going to be lower probability. So let's go over the shorts I took and why they were bad, actually. So this first one, we were delivering from this 2 to 2.5 standard deviation. We swapped out this high here. Here you can see us sweep out this high. And first of all, we don't even close below. We don't even get our inverse fair value gap. So that is a giant issue that it's a problem. Like it's not even a valid trade, first of all. So that's the first thing. Second of all, so you can see that here that we don't even really close below. Second of all, there's not really good liquidity to target. There's this low, but just having one low, that's not like really ideal. So that's the second thing. Hang on a second. Oh, I forgot to mention the reason that I was so bearish. Like, why did I want to be short? Because we had London and Asia's lows that were right here. And so I wanted to see these get hit. But here's the thing. when you're at all-time highs and you're trending up like this, you just can't be bearish until the market actually shows you its hand that it's going to be bearish. You can see we're in a pretty systematic uptrend. Until the market really actually gives you a reason to think that it's going to come here, it's probably not going to come here. Just because we're at all-time highs, we're going higher. And so you can't just take the biggest liquidity pool and just say, that's where I'm going to target because understand like the context. Like we were delivering from that daily breaker and we were continuing higher. So it's just understand the context that we're not necessarily going to come to this giant liquidity pool right away. Okay. So back to what I was saying. Let me look at the trade I took. Okay. So yeah. We don't have good liquidity. You want to see a whole bunch of lows. You don't want to see one singular low. And I was going to move stop to break even here. But you can see we don't even hit it. And so if there's not good liquidity, it's like a lot of time you might not even hit your stop to break even. And you're not going to even get a break even trade, which actually really sucks. So that was a huge lesson. You'll also note we had an external gap here. That was a red flag. Now, in this case, like since we had good liquidity here, we were able to expect maybe that this external gap would break, but if it didn't, we were gonna move stop to break even right away. This one's not the same because it's not as good of liquidity as this. This is like really, really good liquidity. This LRLR here. So just understand the difference between like good liquidity and just like a random low. It's not the same trade. So yeah, we're delivering from here, but not the best. And then also you'll note, check this out. The macro ended. So the macro was completely done. We got this move during the macro. After the macro ends, we don't get our move back down. And so it's like, well, that was expected because the macro ended, right? Something else I'll note is you really want to have your trades not be at the same level as the accumulation range you're targeting. Like I entered this trade. So let me see where I wrote this down. Like usually you want to target the stop losses of whatever consolidation you're targeting. In this case, those lows would be right here. One, that's terrible RR. Two, yeah, it's just you don't want to enter your trade if it's at the same level of the consolidation. It just doesn't make sense. It's almost like you're entering in the consolidation, right? So yeah, we got a good manipulation move, but you're entering at the same level of the consolidation. It just doesn't make a ton of sense. And then yeah, I think let's see what else. Yeah, that essentially covers everything that wasn't so good about that trade. That trade was just, that one was the worst trade of them all, probably. Just didn't even close below, so. And then this one, so here I took this again. Once again, should not be shorting at all-time highs, but I tried this. This one was a little better because we had good liquidity here. And once again, we're still delivering from this 4 to 4.5 standard deviation. So it seemed okay. We had good liquidity. You target any of these lows here. And so this one was a little better, but it's important to like recognize the smaller details. Actually, we weren't delivering from the 4 to 4.5. But it's important to recognize the smaller details, and you need to make sure your trade is valid. You don't, so on the 2-minute, you can see, wherever it is, on the 2-minute, you can see here, the 2-minute actually did not close below. And so since we have a 2-minute gap, you need to see the higher time frame one break. And since the 2-minute one did not close below here, this would not be valid. You need to see the 2-minute close below. And then maybe this trade would be okay. But yeah, because if we didn't see it close below, it wasn't even valid. And once again, don't short at all-time highs. We hadn't hit the 4 to 4.5. That's another thing. One thing that this trade had going for it was, I guess we were in the macro, but just don't short at all-time highs, especially when you were super bullish like this. Just it wasn't the best. Then I took another trade. It was a break even. So these two gaps put together, these two candles put together, once we closed below both of them, I entered short. Okay, here's that short. Stop above this candle right here. And then simply targeted, I was targeting once again these lows because we just had good trendline liquidity. So the idea with this is good because that good trendline liquidity, but once again, don't short at all-time highs. That's my new rule. It's a really important rule. I'm not going to short within 75 points of all-time highs. You'll note as well, so like, yeah, although we were delivering from, this was the 4 to 4.5 standard deviation, this wasn't during the macro. That's what it was. This wasn't during the macro. We get this inversion. It wasn't during the macro. And then what happens once we do go into the macro? We actually get SMT with this low. And then we get a 1-minute inversion back to the upside. And once again, your longs at all-time highs will always be better than your shorts. I don't care how good liquidity is all the way down there. It doesn't matter. The market's not going there right now. It's saving that for later. So that's something really valuable that I'm taking away from this. You can see we then got this pretty good inversion right after that. And this actually was during the macro. We then targeted this low resistance liquidity. And this one was actually a pretty good trade. Just take all off at the end of the LRLR here. And that would be a nice 1.3 to 1. So that one would have been really good. And it was during the macro too. So just don't short at all-time highs. It's not worth it. Then let's see what else. All right, moving on to today. So I'm not going to cover other people's trades for Monday because I'm going to have to go back to yesterday on Twitter. It's just going to take too long. Actually, there was one trade from yesterday I'll cover. I had this one from Camel from yesterday. And what time was this at? Okay, this was actually going into like market close. And yeah, we closed below this gap. Yeah, this was a good trade because it was like pretty clear once we closed below this, we're going to at least hit this low. And it's a nice like 1 to 1. But once again, I just try to be really careful about shorting at all-time highs. So I think this was good, but I probably won't take this in the future because just I'm not going to short at all-time highs. And it's also just the RR didn't really work out for him. I don't know how his RR worked out, but the good thing about this is it did have SMT. So that is nice. All right. Moving on to today. We actually capped up. Let's see here. We actually gapped up 300 points overnight. That's crazy. Like almost 300 points. So here's your new day opening gap here. Boom. Gap up 300 points overnight. And so this actually kind of made me a little upset on Monday night because I hate trading at all-time highs. I mean, I'm starting to learn now that you just want to long as much as you can and not short, but like at the time I was just kind of like really annoyed with this. And so anyway, talk about what happened next. So if I turn on session highs and lows, you'll actually note that we had a decent 5-minute BPR here. This is just something that I noticed, right? 5-minute BPR, and during the macro here, that's exactly when we deliver all the way down to take out not only Asia's lows, but then we just continue down. We continue down quite a bit. Just maybe barely tapping that 4 to 4.5. So it's interesting because like if you ever see the market just chilling in a BPR right before macro, and there might have even been SMT, I'm not sure, but if you ever see this where the market just chills in a BPR before macro, a lot of time you'll get these really, really aggressive moves. And we do go take out Asia's lows, and we go, it becomes very, very aggressive very fast. And then, okay, here I have a trade from Unicorn Trader. It was on our way back up after we had this sweep. We get a change state delivery, and so we get this breaker. And well, no, he enters once we close. So we close above this. This is a, I guess this is a change state delivery. So he's entering on the retest of the change state delivery, maybe. Yeah, it is a CISD entry. And so, yeah, as well, you'll note that it was the daily manipulation level, and this was a liquidity void. So anytime you see like an aggressive move down like this, it's called a liquidity void, and the market tends to come back and fill these areas. So you can see the market did end up gravitating back towards that pretty soon after. I have notes on this because I don't want to actually write this all out, but we have the liquidity void, the market comes back up, fills it. I know as well that we have SMT at these lows. I was saying eventually, this is crazy that we left perfectly relatively equal highs with Asia. We'll probably come back to that eventually. But for now, we still have those. So this is crazy that this happened. We left these perfectly relatively equal highs. And so anyway, he enters on the retest of the CISD here. So here's that CISD. And yeah, I'm still getting better at the CISD model, but it's starting to make a little more sense. Here's that CISD. And yeah, we just retest it, and then we go to this liquidity here, and we fill in this void. But then we leave relatively equal highs. So this honestly could have been a distraction for anyone who was trying to long in here, because we left these relatively equal highs. But once again, one of the main things I'm learning about strong draws on liquidity like this is the market it sometimes, until it gives you its hand that's for sure going to go back there, it often just leaves it for later. So that's a really, really valuable lesson that I'm learning. Like we might have a good draw on liquidity, but we might not go to it right away. And so know when the market is prepared to go to a draw on liquidity, and that it might not happen instantaneously. Okay, during the first macro, we get, let's see where it is. So we had this data low here. I'm not sure this is a trade I would really take because it's just like the first inversion you get, and there's not really any context to it. It's just an inversion. But if you're like a one setup for life fanatic, then this would have been pretty good actually, because you can see how we close below, and then we go straight to the data low. But I don't know if I would have taken it. But yeah, we do close below here. We go straight to the data low. Stop loss there. Nice 2-to-1. Then this was also during the macro, right? Boom. Then we end up getting SMT with this high, and this was actually a sequential SMT, so that means it's like aligned with quarterly theory. So that's pretty cool. Meaning like one high forms in one quarter and the other high forms in another quarter. So we sweep out this high here. And then once again, you'll note that when we just chill on a BPR like this before a macro, so here's the macro from 9:20 until 9:40. Here's that macro, you can see that right here. When we just chill in a BPR like this is a 3-minute BPR before macro, this is what oftentimes happens. You'll just get really aggressive moves towards your targets. And this SMT really helps with the bias as well. So just understand, like, if you're ever chilling in a BPR right before macro, that's a sign. Then if you measure out this manipulation move, you can see we go right to that 2 to 2.5 standard deviation. It's pretty cool. And then, okay. So let's say you took this BPR trade. So pretty good RR. Target this low, 2.67 to 1. Targeting the 2 standard deviation, that's 4 to 1. So not bad at all. Then let's see here. Okay, then we had another SMT going into this macro. I'm not exactly sure like what trade there was here though, but it's interesting to note that there was SMT going into this macro. Once again, I'm not sure what trade you would take, but here you can see that SMT. We were going into that macro. We ended up taking the lows again. So I'm noticing a lot of time you'll leave these fake draws on liquidity like this to just wreck people over and over again and go the opposite way. Like this fake, where was it? Like these equal highs, yeah, they're a really good draw on liquidity, but we might not go there instantly. And so we're just wrecking people over and over again that are thinking we have to go there right away. So boom, SMT, boom. So this was during the macro. And then let's talk about a trade from Dodgy. So here we had a trade from Dodgy. One and done. This one is a nice one to just get a high quality trade and get out. And once we break this fair value gap, we go run all these highs straight to this internal high. And you'd for sure move your stop to break even here, but really nice 1-to-1 trade here. We also had SMT at these lows, which I don't think he saw. Or maybe we did, I can't remember. Let's see. Yeah, we did. So we have SMT at these lows. One thing I don't like about this is we were outside of the macro, so I probably wouldn't take this. But there you have SMT at the lows. Yeah, I'm not sure I would take this, but we close above this 1 minute, and then we go straight to that high. And then as well, check this out. You have a pretty good breaker for value gap trade, but once again, I mean, it was okay. I noticed it, but I'm not sure I was in love with it. But I'll mark it out just to show you. Here's that breaker block. Here's that fair value gap. And then we had SMT here. We then go to run all this all this LRLR. Measuring this out here. Yeah, it doesn't really line up perfectly, but anyway, you can see how we respect this. And then we stop loss below the breaker or below the low, and you go to run this high. So that would have been a good trade, but I didn't have a ton of confidence because why didn't I have a ton of confidence? It's just a 1 minute. It's just a 1 minute 30-second breaker block. So I didn't know if it was outside the macro, so I just wasn't sure. But you'll note that actually, no, it's on the next trade. Okay, hang on. All right, after all that happens, we end up consolidating for a bit. And you can see here, although this was like a macro time, after just two really, maybe three even, expansive macros like this macro just ends up chilling. And okay, going back over here. And then we had a trade that I ended up taking, and I ended up copy trading this. I thought this was honestly, I think this was okay, but I don't know if I would copy trade this next time. I might be just take it on one account, but I'll just show you here since I don't want to draw it all out again. We had a 2 minute breaker block, 2 minute for VI gap, SMT at the lows, just shot for 1-to-1. FA took the same exact trade, and he actually ended up making $4,000 from this, so that's pretty cool. But yeah, I just wanted to, since I'm just on my copy trading, I'm just trying to shoot for like really low RR trades, so I can just hopefully be consistent with these funded accounts. So we'll see, or these eval funded accounts. Oh, and then the last thing I want to note about this was we did the low here. Another reason this made this trade a little better was we reacted off the midpoint of that new day opening gap. And then lastly, since I don't want to draw this out, there was a trade in the PM where you had pretty good low resistance liquidity, and then this breaker overlapping with this for VI gap. Enter here, stop loss at the low, and then target these highs. So this was really good. AMD as well. So yeah, that was a lot, but hopefully you found this valuable. I will see you guys in the next one.